Good morning, all, and welcome to the next episode of Talking Balldocks with me, Neil Baldock, and my brother.
Matt Baldock. There you go.
Good morning.
Um, we're recording this the day after the autumn budget, so we are partway through our series of our 7 pain points of estate agents. But as it's the day after the budget, we thought we would just kind of pivot slightly and just kind of discuss what happened yesterday and the messaging that we believe agents can use to both their buyers and their sellers, particularly around buy-to-lets, right? Because that was the bit that kind of impacted us.
Yeah, 100%. Yeah, so how it looks for buyers, sellers, but also importantly, landlords, and what kind of the investment outlook is like, I guess, for residential property.
Sure. Shall I
Yeah,
go?
kick it off. Why
Yeah.
not?
So I think as with everything, we're all expecting a terrible budget because there's been a lot of the rhetoric we put out, this is going to be a painful budget. And to a certain extent, they were quite clever, I think, because they kind of made it sound like it was going to be really bad, and actually it was mildly bad. Don't get me wrong, at the time we were watching it, the headline numbers of the extra 2% surcharge for buy to lets coming in, and we all kicked and moaned. But actually I think when you take stock of it the next day, and this is why, I mean, we haven't put anything out for our own agency yet. I'm always conscious of being right with the facts rather than being the first to report anything. I don't think it's as bad as it could have been, right?
Yeah,
Um,
yeah, I agree.
Now, my view on it is, so let's say you've got a £250,000 apartment, a fairly standard investment property here in Chelmsford. Yes, it's now going to cost the landlord an extra £5,000 to buy that property. Um, but if you think about it, there isn't really any, and in brackets, luxury purchase you can make in life without paying a surcharge. So I was thinking about this morning. So if you want to do something as basic as join a gym, there's usually a setup fee. You have to pay something before you get the benefit of it after that. As me and you know, anytime we want to invest in a bit of tech for our company, not only do we have to pay them their monthly bills, we have to pay this setup charge that always comes, right? Even down to marriage. You want to get married, you go to a venue and they go, it's £10,000. And you go, that's okay. They go, oh, but by the way, if you want forks for your handles, that's another £1,000. If you want handles on your cups, as you know, that's another, you want nicer plates, and they go up. Go and buy a car. You get told a car's 25 grand on the road, but would you like indicators? Would you like a steering wheel? Do you want air conditioning? And the charges go up. So we are used actually to paying a bit of a surcharge for most things that should be really considered a luxury if you like. And with property, it's another one. Now it's one, as with everything, it's one that we weren't paying yesterday, and we've got to pay today. So we don't. The instant thing is we don't like it. But moving forward, really, if I've got a big chunk of money and I see property as a long-term investment, and this is you're a big believer in a long-term investment, is £5,000 really the thing that's going to stop you with your long-term investment strategy?
No, I think if you're in it for the long term, which, at the end of the day, residential property is a long-term investment. And I still fully believe, and we put this out there, that I still believe residential property is one of the best investments you can make if you're in it for the long term, because there's not a lot that will give you the sort of capital appreciation as a residential property will, but over the very long term. But I think, I think what it's going to do, we probably may see some of the more accidental landlords who are doing a let to buy. So let's say they can't sell their property for whatever reason, or they're struggling to sell it, and they decide to let that out to go on to buy their new one. That's where the squeeze will be, because those type of people, they're not a professional investor. They're only doing it to enable their move. Um, but the thing is with it all, it just simply gets factored into the pricing. The simple fact is, buy to let property is a business, and people don't view it in that way, but it is a business, and so there's costs involved in it. And one of those costs is now a 5% surcharge on the stamp duty, and ultimately that just gets factored into your purchase price when you're buying the property, or you factor it in over the long term. The other thing we're going to see is, in my opinion, is the rents are just going to continue to rise now, because I do think it will. I do think for the short term it will limit the amount of people that are going to buy a buy-to-let property, and there's many things we could talk about on that in terms of the taxation of landlords and the legislation, etc. But it's not going to stop. It's not going to stop everybody. It's not going to stop your professional investor from continuing to invest in buy-to-lets. But I do think what it is going to do is is limit the supply, and therefore rents will continue to rise. But if you're getting so much of a better yield from your investment now, again over the long term, you just either factor in the extra stamp duty A into your purchase price, or B spreading it over however many years you're going to own that property for.
Yeah, exactly. And I think the other thing is, and I think they've been fairly clever with the way it's all worked, is because while everyone's feeling a bit of a kick today, I would say I'm 99% certain we're going to see a base rate drop next week. Mortgage rates aren't always directly affected. They usually move a little bit early, but most people are convinced we're going to see mortgage rates come down. So it's going to almost be we're taking away with one hand, we're giving with another. So again, that extra 5,000 with a lower mortgage interest rate over a 25-year mortgage, for argument's sake, can be slightly mitigated. Um, I think, but you make a very good point about the pricing, and this is this is the messaging point I think for agents out there when they're speaking to their potential sellers of properties. So what you would tend to find is, I would think, a property that has at a certain price point has a market either for first time buyers or buy to let landlords. They tend to be the similar price properties. Now, I hope there's no agents out there telling people they're going to get an exact amount for their property, because I think that's a very silly thing to do. I think you should always be telling people you'll get between this range. And the range is just slightly different now. So you can say, hey, Mr. and Mrs. Seller, I think if a first time buyer comes, they fall in love with it, they've got to get emotionally invested, you'll get between X and Y for it. It also would suit the buy to let market and will push that very heavily. Just so buy-to-let landlords have to pay an extra 5% on top of the normal stamp duty, and so they will account for that in the price. So for a buy-to-let landlord, probably won't be quite X and Y. It'll be maybe £5,000-7,000 less than X and Y. Obviously, we want to get you the most money, so first-time buyers ideal. But if, for instance, I don't know, we're in an area heavily student populated where not many first-time buyers want to move into, and it is a landlord market, then, let's just base your sums. And I do this with all my valuations. Let's base your sums on worst case. Let's base your sums on getting it minus the stamp duty. And then if we do get you the first-time buyer in, the money's in your pocket. So I think that's just the way it has to be presented to the seller.
Yeah, no, I agree, mate. I agree, and I think the other thing is, I mean, it's people often say, "Oh, landlords taking the first time buyers' properties," but let's not forget that not everybody wants to buy, and not everybody is a first time buyer. The buy to let property that I own, it was owned by a landlord. We tried to sell it, and no first time buyers bought it. So if I hadn't have then bought it, it would have still been a rental property anyway. So it's not like, you know what I mean? I just think there is this rhetoric around the competition between landlords and first time buyers. And I just don't think that really exists
No,
because,
you're
you know,
entirely correct. Sorry, you're correct. I suppose that's two separate. What I wanted to hear was the messaging for sellers, agents used for the sellers and buyers. But if you just want to do the overview of it,
well,
you're
no,
entirely correct.
we can talk about that another time then. But I think the message for landlords is like now, if you go and sell your buy to let, which I think would be unless you've got a real reason for doing so, not a wise move, because it's actually going to cost you more to get back into the market now as well. So some of the landlords in this current market have already paid the extra 3%. If they now go on and sell their investment, and then should they decide actually I want to get back into that market, they're now it's going to be more expensive for them to come back in. Probably both in terms of purchase prices, but also now they're going to pay another 2% surcharge. So, I just think from a landlord's point of view as well, it's not really a bad time to be in the buy-to-let market. I know we've got more regulations and everything else coming, but the yields are just going to get better and better because I don't see a whole host of supply coming into the market.
Sure, no, I agree. And then so that's also we've covered our sellers, our existing landlords. Then I think for potential buyers, because so you've already covered off. We might lose the accidental landlords, but there are professional landlords that still want to buy. And I've seen on LinkedIn and in varying Facebook groups, agents, oh God, no one's going to buy to lets anymore. Nonsense. Because I think the messaging for your buyers is, look, it's just another surcharge for a luxury purchase, but also, okay, you're not going to buy the property. I'm assuming you've got some money to play with. You have got some money to play with. Can I just ask what else you're going to invest that in?
Exactly.
Because ultimately, in this country, we're obsessed with buying property anyway. And also, as a long-term investment, I don't know of anything that has showed the sustained period of growth that property has. Now, listen, I'm not a financial advisor. I don't know anything about Bitcoin. I know shares go up and down, and shares can go pop because we've personally been burnt by that in the past. And I'm sure gold does very well. But in terms of actually a long-term investment, property always goes up. Even if we go through a recession, if you hold it for something like 7 years, it always comes up. So I think really when if you're phoning through your buy-to-let applicants, oh, this stamp duty. Okay, no, look, I understand that. Just out of interest, I can, I'm thinking about investing myself. What else are you going to invest in? Oh
Mm.
well, I don't really. Oh well, because my thought is that property will always go up eventually, and it's that long-term game. So yes, we're all licking our wounds today, but in reality, let's say 5,000. If you buy this property for £250,000 now, Mr. or Mrs. Landlord, and you hold it for 10 years, is it likely you're going to more than make that £5,000 extra back? Yeah, I
Exactly.
would think.
Exactly. And the other thing to just point out to people is that if a property does go down in value, you still own the property.
Yeah.
It's highly unlikely we're going to get into the negative equity statuses we had, back in the 2008s, etc., because we don't have 100% mortgages anymore. In fact, buying a buy to let, they're very strict on you must have minimum 25% deposit. So we're unlikely to see negative equity. So even if it drops in value, you still own it. And as you've said, over the long term, all the graphs prove that property increases in value. So, and as I keep banging on about, if we keep having the government limiting the supply, then all that happens is simple supply and demand economics. The rents continue to increase, which actually isn't caused by the landlord or the agent or anybody else. It's just caused by the market force that the government has created by limiting the supply. So yeah, it's just they're good investments. And the other thing is they're safe in your mind, if you do have some money and you think, oh, like if I went, I don't know about stocks and shares. So if I'm going to invest some money in stocks and shares, that's a risk. That's a
Mhm.
risk. But we all know property is safe. Like it is a safe environment to be in, and the British public feel safe around property. So investing your money in it feels good, and you're helping to house people. You're providing for your own family. Like it just feels safe to the public.
Well, the saying is literally safe as houses, right? And
Exactly.
the whole point is you can see it. Your houses or your flats don't move. So if you want to see where your investment is, you don't have to speak to your pension provider. You don't have to speak to an IFA. He shows you all graphs and anything like that. You can literally walk down the road to number one Acacia Avenue and go, it's there. And it hasn't gone anywhere, right? You don't actually own money. You put the money in the bank. That's not your money anymore. It gets filtered out everywhere. You can't just go down to the bank and withdraw £1 million, on a whim. So, I know you keep all yours under your bed, under your mattress anyway. You're multi millions, but houses are tangible. They're there. We like buying them, and the long term growth is proven, and it isn't a flash in the pan. It has been proven for literally decades and decades and decades. So, yeah, just to cover off. And then, if you want, we can have just a moment or what about what an arse that the government made. But just to quickly cover off the messaging, I would say for sellers, it's look, we need to look at the banding you're going to get now. People do still want to buy. People do still want to buy to lets. Hopefully, we'll get you a first time buyer, but you are looking at slightly different prices between a landlord and a first time buyer now, and that's a
Yeah.
fact. Um, for potential buyers, okay, great. I understand the extra 2% is a kick in the nuts. Can I ask what else are you going to invest your money in that's going to get you the long term growth? And as you say, for existing landlords, almost again, if you take your money out, what are you going to put it back into? But rents are going up and up and up. And so and also as is the actual price and the value of the asset. So you're winning twice. You're going to get higher rents, and eventually, when you do decide to exit the market, your profit is going to be a higher amount. Another beautiful thing about the market is if the value aren't gone up, you just hold it, but your rents are still going up, right? Because even if house values come down, rents tend to go up.
Rents tend to go up exactly. So it's just it's normal market forces. We've got maybe a little bit of more negotiating people who are going to do that kind of thing. But um the other thing is like from a landlord's point of view, if I was thinking, oh, I'm going to sell that one and buy another one now, I might reconsider and think, well, actually, I might as well just not go through that hassle and spend the 5,000, let's say, that it's going to cost me to buy the next one. and upgrade my current property. So it just doesn't make sense unless you want out of the buy to let market for forever, um, which, unless, yeah, you can find somewhere that's going to give you a pot of gold if you put your money in it, which we haven't found yet. Um, Holding your property over the long term is the right way to go.
Good stuff. Good stuff. Right. Hopefully that is helpful for everybody. If you do want any help with your messaging on your social medias or in people's living rooms, give me and Neil a shout and we'll let you know what we're going to be doing. I feel like I stunted a bit of a rant from you about the government. Do you want to do you want to have your little go?
Well, I mean, the thing is, yeah, why not? I mean, what just amazes me is the what the government do is they put a headline thing in there to win the votes. We all know that. That's fine. Okay, yeah, that's government marketing, let's say. But do they really not look at the simple economics of a supply and demand in the free market, which is what we have in the UK? We have a free market, and if you de-incentivize people that have been providing a large proportion of the housing stock for a long time, um, then of course there'll be less stock in that market, and therefore the rental prices continue to increase. So whilst some of these headlines are saying, oh, people are going to not employers, of course, because they've stuffed us on national insurance, etc. But that's a different conversation. But whilst they're saying to the public, oh, national minimum wage has gone up, um, everything like this, so there's some benefits for the general public. It's also going to cost them from their back pocket because basically costs are going to rise for everybody. And as we know, the property market generally fuels a lot of the economy. So if property prices are rising there, it doesn't surprise me if other prices start to rise as well.
Yeah, no, 100%. And it's actually it's short because everything's been governed to try. They're what they're saying is they're trying to make it easier for first time buyers to get into the market. They're basically trying to halt landlords buying to so first time buyers can buy, right? Actually, first time buyers are the biggest portion of the market, and I'm not just saying that. Zoopla even say that. So, and every agent I speak to, pretty much every agent I spoke to yesterday wasn't worried about deals collapsing because they put this extra 2% on instantly because they didn't have that many sold to buy to let landlords anyway, mostly first time buyers. So for a start, they're kind of fixing a problem that I'm not really sure exists. But also, and I was asked to write a piece yesterday. So what I mentioned was if we had just a bubble where landlords only sold property to other landlords, fine, leave them in there, give them the kicking you want. But in reality, the landlord's buying a two-bed flat, say at 250 grand. That's owned by a nice young couple, right? They're going to go and buy a three-bedroom house. Some with a growing family. They want to go and buy a four-bedroom house of an elderly couple. That's the basic chain. So all that's going to happen is the landlord's going to go to the flat and say, "Oh, by the way, I need to renege the price by 5 grand because the government have done this." So either that couple there in that flat lose out, or they go right. They go to the three and say, "We need 5 grand off yours."
Yeah,
Or if the agents, and and again, we should point it out to the government, agents actually do quite a lot of work, they agree to split it. So, absolute best case, the couple in the two bed flat, the young family in the three-bed house, and the older couple in the four-bed house all lose £1,666 and 67p each. Or worst case, the young couple just get kicked for 5 grand, right? It's very unlikely that the big bad landlord is going to lose the money. So what they're forgetting when they're doing this is buy to let properties are involved in chains. So
yeah,
actually by penalising the landlord, you're actually penalising, and again in inverted brackets, the normal people that they talk about, because apparently landlords and business owners aren't normal people. Um,
and
so and that's
that,
that, that's the bit they don't seem to have worked out.
no, 100%. And also, don't forget, just as one final point, when a buy to let property is sold, again, like you said, there isn't this bubble where it's only sold to another investor. It goes on to the free market.
Mm.
So everybody from first time buyers to second time buyers to landlords has the opportunity to buy that. And actually, I would argue a first time buyer would normally probably pay more than a property investor would for it. So if they wanted to buy it, then they have that opportunity. And whoever's selling that property would probably favour a first time buyer because they generally pay more for it because it's their home and they're not looking to get a deal as such. They're just looking to buy a place for them and their family. So it's not like, do you see what I mean? It's not like people don't have like the option to
The
buy.
chance. It's not like they only go out to. It's like we have a secret right move just for landlords, where it goes on 3 weeks before it goes out to the first time buyers. Yeah.
That's right. So, yeah, but
Everything.
all interesting stuff. But I think, yeah, the property market is still good, and it's yeah, if you want to invest your money anywhere, for me, residential property over the long term is safe as houses, as you say.
Nice. So there you go. So again, as with anything in the market, I've worked the global banking crisis. As an agent out there, you can either put on your head on your desk and moan and say, I'm never going to sell any houses, or you can work out your messaging and actually a sensible answer to most questions. So hopefully we've given you some ideas there. As I say, we're always happy to chat if anybody wants. If you're watching this on YouTube, please do like and subscribe. Or if you're listening on a podcast, please do remember to subscribe to that. Have I done that right, Neil?
Yeah, I mean that'll do.
Good stuff. Brilliant. Right. Well, we'll let everyone get on with their days. Thanks very much. And we'll be back next week with more Talking Bulldogs.
Good stuff. See you later, everybody.